a little less amped up than usual, but I was in the mood for something a little lighter than the usual classical, or the epic classical music that we play. Now, relatively large moves last night. In fact, in gold, it was the largest fall since 2013. Now we warned about this for a little while now, that the stops were building underneath 1300, and they definitely took the limelight in terms of the market moves. There was some focus beforehand on, say, pound dropping to all-time lows, but that story is a little less spectacular. And definitely from a Forex client trading side of things, in terms of the impact on retail traders, a lot more people were trading gold long than were stuck still long pound. So the impact there, especially in terms of client inquiries, was a lot more for me anyway. What's happening here now. Understanding gold, you have to understand a few various moving parts. One of the most important is the central banks around the world, mainly the big central banks, and their monetary policy. All right, so what we're talking about there, and what the big move was last night, and the big surprise to the market was last night, was that there was talk out there that the ECB was planning to taper, and we're seeing some immediate reaction as that story hit the wires last night. Now, what does that mean? Okay, so if they're buying 60 billion bonds a month, and the market's wondering what they're going to do next year, they may start to lower that amount every few months, similar to what the US did. And it's a form of withdrawing monetary policy. So it's not straight away that you withdraw monetary policy, but it's a form of slowing down that purchases. Okay, and it's the first step before you start to raise rates a little bit later. So the Fed, they did it back in 2014, and then you saw immediate US dollar strength on the back of that. This sort of story is the one which can get a lot of strength for the euro. Now, they did come out and deny it. They denied it was working, that they were working on this, but I think the cat's out of the bag in regards to what the ECB is planning to do in March next year, and how they word it and how they bring it out to the market, I think is just a matter of style rather than substance. It really makes sense that they will start to taper early next year, and the main reason they need to start tapering is they're running out of bonds to buy, and they don't want to be too big an impact in the markets there. So tapering makes a lot of sense, a lot more sense than just straight up finishing at their scheduled time, which is 2017. And when you get this sort of news that the second largest economy is starting to taper, and that also last night we had some comments from some Fed officials suggesting that they may raise rates in November, right? So not really a month which everyone's looking at. That was enough to crack gold. I mean, gold doesn't have any sort of interest rate return. Okay, so it's not an investment that you get yield from unless you get capital return. So expectations are very important for gold. If expectations going forward are that gold's going to be in less demand because central banks are raising rates in the next 3 to 4 years, then of course people are going to start to dump that. But more importantly, if the market comes under selling pressure and breaks a significant level, then liquidity in gold's not as big as currencies, and everyone trying to get out at once can lead to a sharp move. Alright, so that's what really the main catalyst of the selling was. And we're actually going to update here, so you can see this before the crack. When we draw this line ages ago on the last test, we're like, oh, at some point we're going to bust that. And it kept on surviving, but the highs got lower. So it was really almost felt like a matter of time before we broke that. Now, how far can we go? Definitely 1250 is possible. Alright, but you can't rule out a bigger pullback if it becomes a major theme here that the central banks are more towards the end of their monetary easing than the start of it. And unless there's a lot of stock market selling, and gold can catch a safe haven bid, which is another thing that gold has, or we start to see inflation come through, or expectations of inflation come through, that's another reason gold can get a bid, then it is more likely that we break into a lower range, then go back above that 1300. All right, it would require some spectacularly weak US data to push back Fed expectations, and then perhaps the ECB clarification that they're not looking to taper in 2017, something along those lines, right? And you get the gold to rally substantially. Okay, but without some really weak NFP data on Friday, I think the damage has been done technically and sentiment-wise. And you don't get many people out there saying gold's going to 1500 right now, right? All right, so the retail traders, if you're caught above 1300 and you don't have stops and you didn't get margin call because you're trading small and you just want to buy and hold or even buy more, the buy and hold strategy on gold and buying more in dips, you got to be really careful as to where you enter your second trade. And I think that this is going to get you in a lot of trouble. Okay, this is not the sort of situation I would be looking to sort of fight this trend. This is not a false move, right? There's nothing crazy about this move. This is not markets move too far. This is not, it's cheap now, let's buy. I got no faith in this market going back up at all. All right, so selling rallies, a little bounce to 1280 makes a lot of sense to me. And you can naturally put your stop, say 1305, 1310. It's going to require, like I said, really weak NFP. A strong NFP number, this bad boy is testing 1250. It could test 1250 without NFP, even just on momentum straight away. All right, now the other trade that we were talking about, pound, is last night it was testing 128 as we were doing our update, and we're like, oh, it's going to break that. Yeah, it broke that. Yeah, it did. It didn't break and come back up either. It just smacked it. And, now we're looking at a situation where we're looking at 125 as the next target. That's the bear target in the market. The sort of news which can get a sustained rally in pound is progress has been made on UK trade deal with Europe, positive signs. So blah, 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 right? Now, that sort of headline I don't expect to hear for a month or two. The sort of short-term rally that you might get just from market being overly stretched, that's a different story. Okay, but the ability to get above, say, 130 or even back above 128 is going to be limited by the sort of news that we get, and the sort of news that we're going to get probably is going to be more hostile than positive, right, going forward. So hostile, I mean posturing from, say, Foreign Secretary of the UK and say the European Union trade ministers, right? That you don't go into those negotiations on a weak footing saying we're going to give you what we want. Basically EU doesn't want UK to have these restrictions on immigrant workers, and that's the main thing that they're going to be pushing for, the right to control their own borders. Okay, so these trade deals have got friction from the get-go. How they get around it and who caves in, and it's a very political sort of debate at the moment. EU doesn't want to look like it's giving in, and either does the UK. Okay, so it's the pound, I think, is going to remain pressured while the market still responds to Brexit news. Now, we could be sitting here in 2 weeks' time and the market's just got Brexit fatigue. And, we could have a sustained rally back to 130 just on market positioning alone, because everyone's, big traders are short and they have to take profit at some point. Now, the BOE hasn't made any sort of overtures yet that they're responding to the string of decent PMI data that we got last month. This month we got another string of better than expected PMI data. Now, this is the sort of... This could actually lead to a little bit of an adjustment from the Bank of England, saying that they may, not look to raise to cut rates in November. That would help the pound, obviously, but we've had speaker after speaker come out from the Bank of England, and they've all been leaving the door open for rate cuts. Okay, and every time that happens, even with the good data, you're getting more pound selling. But yeah, there is a limit to how much selling you can get on the same story, and how much fear is, like, you know, there's a little bit of greater fool theory going on here. Who's going to be the last person to sell the pound, right? Who's going to sell the pound underneath 125? You'd take some pretty aggressive bear to sell a pound underneath 125. And so, yeah, I think it's going to settle down a little bit, go into range trading at these levels. This is quite low. And so there's going to be a lot of opportunity here. You know, the pound is a little stretched, and I'm looking to either sell the next rally or even buy the pound if we get the right level of, well, that's just ridiculous sort of sell-off. Okay, so I'd be buying personally 125 the first attempt. So we'll see how it plays. I don't know if I want to buy pound. I might sell euro pound. But selling euro pound now has become a lot more dubious with the ECB maneuvers last night. We have to keep an eye on that ECB news. Like I said, the ECB came out and denied the rumours, saying they're not thinking about tapering. But obviously they are, right? It's common sense that they are. So let's see if they're a bit more forceful in denials. That way we can look at the euro pound selling as a potential way of playing pound. That's a pair which is relatively easy to trade if you get a good grasp on it. It's the same as pound Swiss long, but yeah, we've got to be careful if we're going to go counter trend trading on that pair anytime soon. And even if we are counter trend trading, you're going for 100 pips or 200 pips. You're not going for the big one just yet. The big one requires that positive trade news, and that's probably early next year rather than later this year. So yeah, I'm finally getting to the same sort of bearishness as everyone else. That, you know, the market still loves to sell the pound. I was a little bit taken by the data, right? You remember me talking last month how the pound recovery, like, you know, at some point there's going to be this huge recovery in the UK. That can't happen, I suppose, until we get political mess out of the way. Yeah, so timeline of the trade is being delayed by 3 months. But yeah, boy, am I interested in buying the pound when things get sorted out. And I'm not talking about move from 125 to 135. You know, I really think that mid next year, post positive outcome of trade negotiations with Europe, you know, you're going to see a move back towards 140, 145. I just think that's incredibly likely. Currencies don't go to extremes and then trundle along at the bottom. Yeah, that's not how it happens. It's a sharp snapback and then move back to a more reasonable level. I mean, the pound has a more reasonable level around 140, more long-term reasonable, even with the US raising rates. That's including US raising rates. But yeah, timing is everything. Similar to Aussie Kiwi trade, right? We're early on that trade, and now it is kicking. Got a little bit of weak news out of New Zealand last night. The data there was the milk prices fell again for the second time. So we've got an extension here, and you know, technically we're starting to really kick here, and it's coming up to the main resistance zone, that 107-ish area. Into the RBNZ scenario where you're probably going to see them remain dovish, whereas RBA has taken a bit of a neutral tone. So, you know, when I get access to that chart again, that 2-year yield spread, so that's the difference between Aussie and New Zealand interest rates expectations in 2 years from now. That gap, the currencies and that line usually roll together. There's a huge gap between where the Aussie Kiwi should be based upon that and where the interest rate differentials are, and that puts us back at around about 111. So that's the sort of room that we're moving up towards in the next couple of months, or next couple of months. Is the stream working okay for me, or what's going on, boys? currencies don't go to extremes, and then it's a fair bit of delay in that, isn't it? That's like a minute ago. All right, so it's still working for me, guys. So I'll just continue the rant. Right, you just you just sit down and listen. So risk appetite's remaining quite strong. We are getting some buying on the dips in stocks, even with that bond market news, which is a little bit surprising given that the bonds moving in the eurozone may lead to a little bit more of that bond sell-off story. Yields are creeping up. So when yields are creeping up, so this is the 10-year now we're talking about in the US and in Europe. When those yields are creeping up, then that means that bonds are being sold off. Now, if that accelerates, then that will create a little bit of turbulence for the stock market. If it really crashes and you get some big stock market movements, that leads to risk-off trading. In that environment, remember the Aussie and the Kiwi get hit. Now, the Kiwi is already heavily under pressure. Kiwi's broken some key levels. So if you're a Kiwi trader, careful. A lot of you like to buy the dip every time it was worked out. This time might not be so lucky. You know, we've got a serious break here overnight, and I think that we're going to get some follow through coming through on the Kiwi soon. Hey, Big River, you really in Texas, man? Oh, you're going after your namesake, buddy. You're going after your namesake. You're really going to be the Big River man. We're gonna have to play that inside the. Yeah, I'm trying to fix that in now recorder. I'm just going to turn off the. I'm going to turn off the. Alright, so it's still working. I'm going to turn off the video. Yes, that seems to take care of that. I think I'm too beautiful for this stream. Let me know in chat when you get up to this stage. Alright. It could be Skype too, man. I'm not turning off the porn, mate. I'm not turning off the porn. So yeah, let me know when you're up to this stage, boys. Let's get some data ready. What are you saying, Broadbent? What are you saying? Causing trouble again? Okay, he's actually coming through being a little bit more stable. Not talking it down. I don't know. I mean, a short squeeze to 128 tonight sounds very, very similar. Very possible. Timing's about right. Man, my stream is way off. I'm watching my stream back. Golly gosh. Yeah, so Kiwi will definitely be under pressure in that scenario. Aussie is under pressure just from gold anyway. Market's also just heading down towards the lower end of that. You are looking... You're looking at potential trade ideas. Yeah, it makes sense that pound's going to have some sort of short cover, given that data, given Broadbent was a little bit hawkish. But that's proven a very dangerous game, playing the pound recovery. So it's not really the trade I'm looking for just yet. Is it just the webcam, man? Maybe that's it. Just can't handle it. Alright, let's have a little look at data though. See what exactly did Broadbent say? Little doubt the economy has performed somewhat more strongly than BOE's short-term forecast after Brexit vote. NBC must remain watchful for any sign that high pension deficits are pushing up the cost, blah, 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 blah. If BOE is minded to ease policy further, there's still asset purchases. NBC reluctant to go south of zero bound. Yeah. I reckon there's a big chance they don't cut in November. I reckon they're talking a good game just to stabilise the economy. But I don't think there's any need for them to rush, especially if data remains strong. It's a nice chart there by Sean Lee. Let's have a little read of Jim Reed then. See what they're focusing on over there, Deutsche Bank, apart from themselves. It's become increasingly clear to us over the last few months that 2016 will go down as the year where monetary policy alone ran out of road in its current form. The last hurrah in the current regime. Yeah, it's getting like that, right? Now, if that becomes a serious theme in this market, guys, then I think the turbulence that you've seen recently is going to get a lot bigger. And it really is going to be the Aussie and the Kiwi which is snapped in that environment, where yields start to increase. The high yielders are going to get hurt the most. Probably emerging markets as well. And then, who knows? I mean, enough focus off the big three and start to focus on China. When you go sniffing around China, you might uncover some negative news. Put a little bit of pressure there on... who knows when China's story is going to become the main story again. It comes up every 6 months or so, but... the mother of all bubbles. Yeah, so they're talking about the ECB leak last night. I wonder if they're going to chuck a tantrum, the European markets. I mean, that's what the US did, right? In this taper tantrum. We're probably going to get some sort of tantrum at some point. I mean, BOJ, you saw that sort of reaction when the market turned its back on the BOJ, and you saw that huge selling coming through on dollar yen from 120 all the way down to 100. that sort of reasoning that we should see a move on the euro, saving there's no issues with further referendums on countries leaving the eurozone, that we're probably going to get a rally back to that 125. It feels like the end of QE is coming. The markets trade ahead of time a lot, right? They're forward looking, 6 months, 12 months ahead of time. So 10 years spiked to 4 basis points. That's not as big as the big collapse that we saw a little while ago. Alright, so this is important to understand. I alluded to that earlier. Currently, the market's not pricing in a tapering as early as March 2017. We're talking about ECB. And as a reminder, Bernd Bernanke first talked about tapering by the Fed nearly 18 months prior to being achieved in 2014. In that time, 10-year treasuries went from 1.6 to just over 3%. Right, there was huge selling in stocks during that period too. That was the taper tantrum from the US side. Oh wow, he's going to talk about the sterling. Sterling lowest since 1985. Yeah. Strong PMI data. Yeah. The collapse in sterling has, however, along with robust data, made for a strong rally in the UK equities. That's true. So it seems to be more about the hard Brexit concerns, alright? And it's going to be a hard road ahead. I don't know, how many times can we sell the pound on the same story? It's I'm sure we're going to go into range trading rather than complete meltdown in the pound, especially if stocks remain relatively strong. Pound yen's just itching to rally. You can feel it when dollar yen's rallying. Pound yen is just itching to get back into its rally mode. How's it been performing? Ooh, is it time to go, boys? Ooh, are we feeling brave? Are we feeling brave enough to give it a go? Alright, this is a bit crazy. A little bit crazy. Let's see how we go. Little one, just a little one. Let's see if we've caught the bottom. It'd be good for 200 points, right? If the market starts to squeeze high. And dollar yen's just rampaging in this, in the background quietly. Dollar yen's just creeping. Nothing to see here, it's saying. Alright, they're talking about gold here. So we've already talked about gold. Gold and silver got smashed. Silver always moves a little bit faster than gold, just because it's less liquid and the numbers are small. Mainly to do with the central banks, the hawkish rhetoric from the Fed, and the hawkish rumour from the ECB tapering. Big news for gold, actually, anytime that sort of stuff happens. I suspect gold is going down to 1250 there. Big on the first move. And also ADP tonight. So this is the preview data for the NFP. It's going to set expectations for NFP. Doesn't really have that big a correlation, but the market still likes to play the did you see that ADP number game? Alright, so if it's a strong ADP number, obviously whisper numbers then for NFP get stronger. And it's rare that you have a super strong number and it doesn't lead to a super strong number in the NFP. So, you know, it's something to keep watching, that's for sure. And Broadbent's already spoke. Prime Minister May is speaking again. Okay, that's good. Maybe she will tone down her rhetoric. We'll see. We'll see that. So that's a keynote speech at lunchtime. I'm gonna have to chat with Potter about that. Although Potter, I don't think he's sleeping normal hours. So, lunchtime, probably 2 or 3 hours from now. Let's see that. All right, might have another little just look at commodity market. Surely they're going to speak about. No. Okay. This is all the commodities, not gold. Oh, this is interesting headline. Hard Brexit isn't even remotely priced in. Alright. What sort of levels are they thinking for a hard Brexit? I heard some banks saying that they were targeting parity. Okay, so that's sort of nuts. Well, don't get so excited and not give us a downside target, alright? What sort of cheeky bastards are these? Alright. Alright, guys. Well, look, I'm going to focus a little bit on trying to get that stream right so I can have my little video in there. In principle, sterling could fall fast enough to warrant removal of monetary accommodation. Oh, wow. There's no target for... Jesus. So when they're talking about hard Brexit, it means that they break down in the negotiations with the EU and they just go ahead with it anyway without having firm access to each other's markets. Okay, so it becomes like a mini trade war. Alright, so yeah, that's something to keep an eye on going forward. Alright, guys, I'm going to be back tomorrow at 9 GMT. We're going to go over a few more market reactions, see how the pound responds to that data today, see if we get that short squeeze up to 128, might sell up there. Keep an eye on dollar yen, it's having a nice little run. See what impact it has there. I mean, this is mostly on the bond market, so this is US yields creeping up, really giving a lift here. You're seeing some big buying coming through on euro yen as well. So that's another trade which makes a lot of sense. Euro yen is just surging higher in the current market. But yeah, we'll see. We'll see if the pound has enough. Has had enough of a beating to have a recovery later. If it's not today, it's probably tomorrow, right? I mean, the market can't just smack it around for weeks at end. I'm not happy selling down here. I want to sell a little bit higher. All right, good luck with your trades. I'll be back tomorrow. Any particular questions or crosses you want me to look at, just send me a PM. We'll load them up for you next stream.